This is Justin Scoop for Wednesday, October 1st, 2025. Take a look at SPX. So let's jump into the daily here. We did gap down pretty significantly at open. And, it looks like, okay, we're going to do a double top sort of thing. Got a little bit of some selling in here. We'll look at that in the 3 minute. But we really mostly just pretty much rallied all day. New all-time high. I just talked about it yesterday. We should hit 6,700 probably tomorrow. I said that yesterday. So we did that. Looks like we're well on our way to 6,750, possibly this week. Yeah, it's just continuing to crank higher. We already broke the pattern, bear, bull, in this case, bull. So two bull days in a row. Really strong looking days. To me, it does look similar to what we did here these 2 days, and it's really similar range. Obviously, we're making a new all-time high, or made a new all-time high today, so that's a little bit bigger, but just I guess, kind of the proportions of these candles, how much higher this candle closed above this candle, just looks similar to how much higher this candle closed over this candle. So, you had the selling to open or pre-market or post-market from the previous day and pre-market gapping down and then got bought up. A little bit different place, location in terms of where the 5 exponential is, but that didn't slow things down really at all as the day was going on. And the 5 moves as the day goes on too. So even this one, it's not like it bounced off the 5. By the time it closed up here, that's where the 5 ended up. So it looks like it bounced. So keep in mind that these are moving throughout the day until you get a close price on the day. Yeah, so let's jump into the 3 minute here. So we did initially have a little bit of selling, got bought, put in a bunch of bull candles in a row. 2 big bear candles actually took out the opens low and trapped a whole bunch of bears right here. And then it kind of chopped. This looks like a bear rest after value. You got 2 bull candles in a row, bookended, like I was talking about the other day, bookended with some bear candles in this case. And then, a couple more bull candles in between, and then you'd expect another bookend. Nope. That's a really small candle. And it just kept going up from there, took out the high, went sideways a little bit. And just every time it rested, it went up. Rest, go up. Rest. Okay, this time it pulled back, but only 2 bear candles, 3 bear candles here. That's the most we had all day until, 3 here again, until right here you had 4 and you had 4 again here. But it was primarily a buying sort of day. Just, had these runs, 4 candles here. Even this, just, was it 6, 7 candles in a row like that? Quite a bit. So this was probably one of the best opportunities for it to just rest and kind of see what's going to happen. It was also sitting right below 6,700. And again, it's so close. It should just push through 6,700, right? Yeah, it did. I mean, it's done that on other all-time high or nearing or approaching all-time high days. And so looking for an opportunity to get in as it's resting, give some room. You can do an absolute zero, give it some room to pull back a little bit more, but expect that it's going to make a new all-time high. So let's continue on. Take a look at the 6,700 call. Today was one of those days, and I may need to turn off log scale to show this easier. Let me see if I can kind of zoom a little. So no, it's still not really what I want. Anyway, you easily could have been buying 6,700 for $1 down here. Now that would have been either right at open or, right about 9 a.m. Central Time. Both of those would have filled for $1. I don't know if this one would have. The low was $1, and then this candle, the low was $1.01, so it would not fill to $1. So there were a couple opportunities to just buy at $1, but you didn't know at that point that it was going to run, So let's turn off, if I can remember where to turn off the log scale. Is it this button? We're looking for time. We're looking for price action and use log scale. Apply. Okay, there we go. Turn that off. I just want to see the whole dollar amounts, because what I like doing on days like this, where it just runs, is kind of look at, and this is where it lines up really clean with the actual values there. So let me sketch what I'm thinking. Okay, so you could have bought down here at $1, right? And then you could have bought in this pullback at $2, and you could have bought it this pullback at $3. Then we didn't get a pullback to $4, didn't get a pullback to $5, but then we did get a pullback to $6. Didn't really get a pullback. It didn't get a pullback at all for a while. So $7, $8, $9, $10. I'm gonna even say $11. You didn't because that was right at the end of the day. So I'm gonna discount that. But then 12, it looks like we did get a bounce there. You could count this as another bounce. If you did count this one, you didn't really get another good one until up here, but then it took that out here. So if we don't count those, really we're looking at this. So that's a $12 pullback, and this is a $13 pullback. And then from there, it doesn't, it kind of defeats the purpose of saying we got a pullback at 14 because that one didn't end up working. It just rolled over. But these are days, it's even better when it lines up every single dollar. But this was just looking for a place to buy at the dollar marks. And you're not going to get the exact pullback on any of these. But if you could buy at $1 and then sell for higher, and then buy at $2 and sell for higher, and buy at $3 and sell for higher, and buy at four, oh, it didn't come down to four, didn't come down to five. How long are you waiting for that next dollar amount to come in? But it could be a strategy. You just buy at the dollar marks and just let it run. You want to make sure you're only doing that on days that it is really trending well. This was one of those days. You just miss some of the places. So 1, 2, 3, 4, 5, 6, 7. I'll say 7 of the prices on the way up. It didn't actually pull back to the exact dollar. You got 1, 2, 3, and then what was it? 6. So 1, 2, 3, 6, and then all the way up here at 12, and then 13. So very infrequent. It doesn't fit like fib numbers. I'm not seeing a pattern with those. I guess I take that back. I am seeing a pattern, kind of a doubling. So 1 to 2 is a double, 2 to 3 is obviously not a double, but then 3 to 6, 6 to 12, those are doubles. So it kind of gives you some doubles, or you could say it goes from double to triple to double, because you can went from 1 to 2, and then from 1 to 3 is a triple, and then 3 to 6 is a double, and then 6 to 12 is a double. Can't really get to 13. That's a prime number, obviously. So anyway, just looking for patterns, looking for like, when does this show up? I don't know. I'm just noticing like, hey, that was really cool that it did that. And then you just hold on for higher, or you sell at a higher price. This is one of those things where it's counterintuitive. It works. I think it works better. I don't have the data to support it, but you know how people buy to dollar cost average lower? Well, if it's already going up and you're buying as it's going up, it's the same as dollar cost averaging, except you're not trying to get your dollar cost lower. You're averaging it higher because it's actually winning more. You're just trying to get into more as it's going up. It's essentially the same idea as buying as it's going lower, except you're not digging yourself into a deeper hole. You're not throwing more money at a losing trade. In this case, you're throwing more money at a winning trade that keeps on going up. And so there's opportunities there. That's the point of this rant, I guess. Yeah, there's opportunities there. If we jump over to the puts, this is the 6,700 put. That price where I was saying, okay, we totally rested there. Well, then we broke down. We had this wick, which I don't even know that that's real. There wasn't really a corresponding move on that candle here. And then immediately had another bull candle on the SPX and then pulled back. So even if that was a real candle, that was your retest from below, and then it just rolled over. And so if you look, from this, seeing, okay, we're drowning, we're going down on the put, right? Okay, look at the call, the same strike, and there were some opportunities where this rested. So you had, okay, there was a lower wick on this put. Did news come out? Like I expected a bigger candle, I guess, on SPX. So it looks like something happened in the option. Sometimes this does happen where there's a bigger spike on the option. There's some infamous ones from a number of years back. But in this case, it looks like there was actually something significant happening at that time. I don't know if there was some news or whatever. I don't know. But just looking at the chart, something happened, and look for an opportunity after that. Okay, let all the premium that got baked into it all of a sudden that pushed the price up. Let that dwindle a little bit, let it go sideways, let it rest. And sure enough, we pulled into almost into the 21. That's close enough, for it to actually kind of matter that it rested over to here. So it's kind of a little S curve here. And when it did that, we pulled back into one of these dollar amounts. So from this one, that came just below six. And then these ones came definitely below six, 5.5, 5.47, 5.6. So you had opportunities to buy at six. Where's your stop? You can do the dollar stop. At this point, you're up quite a bit in this move already. So you want to give it some room, probably. So if you buy at six and stop down at four, it doesn't get the wick. You'd have to go buy at six, stop down at two to really include that wick. So it's a $400 risk, or you go out a little further on the option and go look at a different option to see. So let's at least do that just because there was those weird spikes there. Let's see if something happened at that same time. That's 12:12 Central. So 12:12 Central. Yeah, we got some no, not there. No, not some extravagant wick here. This candle was bigger. That makes sense. It was bigger. Let's look at the 6720. What was that doing? And I should be zoomed in on this because we know what time. We're looking for the 12:12. Okay. Got a wick there. Not much of a wick there. What's the price on this? This is still much further away. Let's come in to the 1710. What was the 1710 call doing at that time? All right, so 1212 is right here. So we did get a little bit of a wick. Didn't quite make it down to a dollar. 1.1. That's close enough. If you got some wiggle room in your rules, if it doesn't have to be exactly a dollar, could it be $1.10? Could it be $1.25? What are you looking for? But it would have worked to buy that at 1212 or to be looking for it. I do like that this rested right around the $2 price. So you definitely could have been buying at two and a stop at one, or buy at two and do absolute zero. And just, if you can, if it does start to move against you, be ready to kind of watch and be like, okay, what are the candles doing? What's it saying? And then you still could have gotten out around a dollar. It just wouldn't have been a stop at a dollar. And then this ran up. Look at this. It doubled. Basically, this candle doubled. It went from 2.1 in the low up to 4.6 as the high. Came way back down. And when I saw this happen in the market, it's like, oh man, what are we doing? That was this candle. It's like, did we make our high? Are we gonna collapse from here? It's like, no, it just made new all-time high. It just made an S curve. The very next candle basically almost encloses this upper wick. You had a little further to go, but we just kept marching higher. It did suck for pullbacks because you had to just buy anticipating that is an S curve, three bear candles in a row. That's an S curve. If you waited for two, it still worked on some of these instances, for two. These sideways ones, not so much. But if you got enough time or if you got enough out of the money with enough range on your risk, or just do absolute zero, everything would have worked until it went flat and last. I guess that's about last hour, a little more than an hour of the day. I guess you could say because it did pull back here, it was really hour, I guess almost 2 hours. No, because it still ran up. I don't know. I guess I wouldn't call this flat because I can zoom in on just this and it's like, oh, hey, look how strong that was. That's not flat at all. When we chopped around, we had a massive bull candle here, relatively strong or relatively massive. So a lot of things moving around, a lot of things bullish. Let's go back over here to the daily. Oops, looked at the wrong thing. Let's go back to that. There we go. So here we are on the daily. We've now got a couple closes above this midline. We did that over here with, actually we had the close here on the bear candle and bull. So it really makes me feel like it's doing some sort of a repeat of this. It's just this is a bull candle and this one's a bear candle. If we have a big selling day like this, if something pulls back pretty much about the same range as today's candle, so if we get sold back down right onto the midline, if we come back down from where we're at now, like 6,700 or a little bit more than that, and we come all the way back down here to about 6,650, then I would expect another bear day and then like gap down and bounce off the 21 again, because that's what it's been doing. It's, if we even look further back here, like we'll get these bull days, we'll get some pullback, people are taking profits, pull back, get into the 21, buy. All right. I need to zoom out. So we just keep doing that all through here. We've been doing that sort of pattern. We got a little below the 21. We closed way down here, got right back and closed above it the next day. You know, closed right on it, got above it the next day. We didn't even get below it. So what's the last time we actually closed below the 21 and then didn't recover right away? That was back over here, going back to April. So it's been almost 6 months since April. Yeah, that was April. So it's 6 months ago that we had this massive move. And there were also other reversal signals, just where some things were crossing and we had the bigger sell off. But that was the last time we were really below the 21 here and stayed below it for quite a bit. And once we got above it, it's mostly stayed above it. So that's been the EMA to pull into and then get some bouncing. And we've been doing that really consistently. Maybe not exactly. Maybe at some point in that day, you've got enough range on your risk that you buy an option during this day. And the trend has been within a day, it's going to close back above the 21 if you got it in below the 21. That will stop working at some point. But for right now, it's working. And you could have most recently done that here when it pulled back into approximately the 21, and then just let it run, just hang on to the options. So if you're going to trade with that, again, this is what I'm observing. This is not recommendation. This is not something that I'm saying, hey, you have to do this. You're the one clicking the buttons. You're the one setting up your own trades. But that is what I would look for. Any sort of a pullback back around the 21. And we've done it so many times now. It's like ridiculous that it keeps working, but so far it keeps working. Watch now, because I'm saying it, maybe the next one won't, but I don't know what's going to end up going to happen. So it could go up some more. I drew in here. Go back and look at yesterday's video. I drew in here like a move up and then a pullback and then continuing up. I think we kind of got the pullback today. If I go up to an hourly, can't really see it there, but even just the move down, it'll show it better on SPY. SPY will show more after hours, show the actual selling. We just really continued nicely. And what we did the last 2 days was a lot of resting, and then we started the rally in the afternoon, the last hour or two of yesterday, and just had a little S curve to pull back pre-market, which we've done plenty of missing those moves because they're happening pre-market. But this one gave us basically the full day for it to just run up and be in for the ride as it ran up. So hope you caught some of that. Hope this helps. This is Justin. Thanks.